is gearing up for a second round of fund infusion into the public. Now, sources tell us that the government will to infuse 42,000 crores in the form of recapitalization. Now, let's go across to Sapna Das, who has been getting at. Sapna, tell us which banks are this exercise.
We have been given to understand that the 11 banks which are currently under the PCA framework, all of them will be up for regulatory capital sometime end of the calendar. That's the sense that we have got. Apart from that, the may not require growth capital. Bank of India may not require any growth capital going forward in the current financial year. Similarly, probably also for Punjab National Bank, because 2 tranches of recap have already happened. So probably PNB may not figure in that list of recapitalization, which is going to be announced towards the mid of the month, next month, or probably by the end of the calendar, definitely by the end of the calendar. So apart from those 11 banks which are under PCA framework, which will definitely require, regulatory capital, it remains to be seen whether there will be any other banks, which may be up for recapitalization. But the sense from the government clearly as of now is that it will be those 11 banks which are under the PCA framework, which primarily need the support of recapitalization. So 42,000 crores is what the government is left as of now in terms of the PSB bonds. And all of this amount we are given to understand will go through by the end of this calendar year. It could be in one go, or it could also be in 2 goes, in the sense there will be 2 separate lists that the government may be looking at. So that number crunching is on as of now, and probably in another month's time we will know who gets how much.
All right, staying with news from the financial sector then, the Reserve Bank of India has further eased norms for overseas borrowing. Now, the central bank has reduced the mandatory hedging requirement for borrowers raising overseas funds to 70% from 100% earlier. The move is in a bid to provide some relief from the liquidity crunch and will apply to all housing finance companies. But this will not be applicable to all NBFCs, and only those that deal with infra financing and asset finance companies will benefit.
Okay, now let's talk about one decision that is very close to the hearts of customers and has been getting a lot of backlash on social media. Now, the decision by low-cost airlines to levy an additional charge on seat selection by passengers who check in online is now under the government scanner. Now, in a statement, the Aviation Ministry said it has noted how some airlines are charging a fee for all seats via web check-in and announced a review to determine if this falls under the unbundling framework. However, remember, Interglobe Aviation did issue a clarification yesterday saying that the pricing is only for advanced seats, and when a customer checks in at the airport, seats would be assigned for free. Now, we spoke to a whole host of aviation experts on the matter. Let's listen into what they had to say.
If you're charging for every seat on a web check-in, then that's clearly against the existing guidelines, which allow only for preferential seating. So preferential seating would mean the exit row where you have extra legroom and so on. But if you're going to have a charge for every seat, then in effect you're increasing your ticket price without really increasing it. So it's sort of a concealed or a price creep. There will always be this issue, and airlines will look at how they can claw back revenue without really raising the ticket price.
Preferential seating is not defined in the DGCA circular. So what Indigo has done right now is to expand the ambit of preferential seating. They're saying anything that is not assigned at the airport is preferential seating, because you get to pick a seat on your own without us having being involved in that. Yeah. So this is only going to go forward.
Well, staying with the aviation space then, saddled with debt, Jet Airways continues to cut workforce and shut down smaller operations as it attempts to turn the airline around. Now, sources tell us here at cnbc TV 18 that Jet Airways have told around 11 ground staff members in Kochi to leave, and has also stopped contract renewals for cabin crew members over the age of 40 years. The airline has also shut its Hyderabad sales office, asking 4 employees to leave, and is also looking to reduce their operations on non-profitable routes. Now, Jet Airways has responded to cnbc TV 18 in a statement that the company said, and I quote, "Jet Airways has undertaken a series of initiatives to enhance the economic performance. Capacity is being moved from uneconomical and point-to-point routes," end of quote. It went on to say, and I quote yet again, "The company is optimizing its resources in select cities, including redeployment resources where needed, for greater synergy with revised level of operations. End of quote.
Okay, moving on to another important story now, and this one is from the pharma space. Now, from the US FDA Commissioner in US, we hear from Scott Gottlieb that in a CNBC exclusive, he says that the Food and Drug Administration plans to overhaul more than 40-year-old process for approving medical devices. He also talks about drug prices and vaccines. Here's a snippet of that conversation.
The overall rate of inflation in the drug sector, the branded drug sector, has been largely flat. So drug prices overall have flattened out. Obviously, some individual companies are taking price increases on selected products, but a lot of the generic competition that's coming into the market is really depressing the overall inflation. Now, prices haven't come down. You haven't seen price cuts, but you haven't seen the kind of 5 and 6% inflation overall across the market that we were seeing year over year. Last week we announced some new rules around safety, some new efforts we're making around trying to ensure device safety, do better post-market surveillance, active surveillance of medical devices in the marketplace, and declare that FDA and the U.S. should really be the first regulatory agency in the world to be able to spot a safety signal among world regulators. Today we're making another major announcement about a really significant modernization of the device approval process. A lot of devices come to market by basically demonstrating that they're substantially equivalent to an existing device, but they use as a predicate the device that they're comparing themselves to, a device that's sometimes many decades old. What we're saying now is we're going to make it easier for device companies to establish new predicates to use as standards for approval, but we're also going to be looking to retire some of the older predicates that companies have been using as a basis for their approval.
Well, time to slip into a short break. Up next, as Rajasthan gets ready to go to polls on December 7th, CNBC TV18 reports from the textile hub of Bhilwara, where the industry has a long wish list. Stay tuned for this special report.